Welcome to Bizworld. I'm Nurin Razmyn. Despite the modest 3.1% growth recorded in February 2024, analysts remain optimistic about the growth outlook for Malaysia's industrial sector this year. While February's IPI growth saw a modest increase, it represented a decline from January's 4.3% growth. Public Investment Bank said that nevertheless, it exceeded market anticipations of growth, ranging between 1.5 and 1.8% by a significant margin. However, external demand remains the primary risk factor influencing the Malaysian economy. While both the government and the central bank anticipate economic expansion within the range of 4 to 5% for the year, the bank suggests a more conservative estimate of around 3.7%. Tenaga IB has maintained its 2024 distributive trade sales growth forecast of 8% on expected robust domestic demand. This is also supported by a projected decline in the unemployment rate to an average of 3.2% this year, alongside a rise in tourist arrivals and spending. The firm remained cautious in its outlook due to the uncertainty of the mechanism of subsidy rationalization, which could potentially weigh on consumer spending and subsequently affect overall sales growth. Malaysia's distributive sales increased to a 3-month high in February at 5.5% on higher sales of retail trade. The firm also maintained its 2024 GDP growth forecast of 4.5 to 5%. Business sentiments have improved in the first quarter of the year following a downturn in the preceding 2 quarters. This upturn in confidence is attributed to optimism towards higher sales, capital investments and hiring prospects. RAM said recent economic data suggests Malaysia's economy will grow faster this year, aligning with their GDP projection of 4.5 to 5%, up from last year's 3.7%. Meanwhile, CTOs opine that this positive sentiment has urged companies to handle upcoming challenges well, especially regarding profitability amidst higher costs. It said focusing on credit assessment and building strong relationships can help small business enterprise (SMEs) to thrive. This is a key strategy to capitalize on emerging economic opportunities. The global initial public offering (IPO) market raised $23.7 billion in proceeds via 287 deals in the first quarter of this year. According to EY, this is a 7% decrease in volume, but a 7% increase in proceeds year on year. The financial consulting company said that the Americas and Europe, the Middle East and Africa IPO markets has had a bright start this year, increasing global proceeds. Across Southeast Asia, IPO activity was similarly lukewarm, with a total of 38 deals raising $1 billion, down from 51 deals raising $1.4 billion in the same quarter last year. Exchanges in the Southeast Asia region that were most active were Indonesia, with 20 IPOs, followed by Malaysia with 9 IPOs and Thailand, 6 IPOs. While the Philippines, Singapore and Sri Lanka each saw 1 IPO on their exchanges. Bursa Malaysia ended lower today due to profit-taking activities ahead of the Hari Raya Aidilfitri holidays. At 5 p.m., the FBM KLCI lost 6.47 points to 1,553.51. Market breadth was mixed with 496 losers against 466 gainers, while 540 traded unchanged. According to Rakuten Trade Research, investors' focus was primarily on US CPI data for further insights into interest rates, particularly after a strong non-farm payrolls report led traders to adjust expectations for a rate cut in June. And that's all the time we have for Bizworld. I'm Nurin Razmyn. Keep tuning in to TV3 and selamat berbuka puasa.